So I've been analyzing more than 30 of the top dividend ETFs out there, and I've found the best 5 dividend ETFs to invest in 2023. And the last one on my list today is actually my personal favorite dividend ETF. These ETFs that I'm about to mention to you guys today are both good due to their performance, their strategy, and of course their dividends. But without wasting any more time, then let's jump straight to the first top dividend ETF for 2023. The first one on my list today is a really popular one amongst dividend investors. And that is because this ETF here has both given a really good return, but is also paying great dividends. And that is, of course, the Vanguard High Dividend Yield Index Fund ETF, ticker symbol VYM. This ETF here seeks to match the performance of the FTSE High Dividend Yield Index. And that is an index that includes companies with a higher dividend yield than average. This ETF has a super low expense ratio of only 0.06%, and the current price is $106 per share. The ETF has 469 different companies in their portfolio, with largest holdings in well-known companies like Exxon, JP Morgan, Procter & Gamble, and so on. It is also a very well diversified ETF with largest exposure to the financial sector. But let's talk a bit about the performance of VYM. When looking at the performance here in 2023, we actually see that they are down by 1.29%. But when we're looking at the top holdings, then we see that Exxon, Johnson & Johnson, and P&G all are down year to date as well. So that most likely explains why they're down. However, when looking over the last 5 years, we see that they have increased by 26%, and over the last 10 years, then they have increased by 80.45%. So overall, then it is very safe to say that this ETF here is looking very solid. But let's talk about what makes VYM a really good ETF, and that is of course their dividends. They have a dividend yield of 3.13% and a 5-year growth rate of 6.08%. And they have been growing their dividends consistently for the last 12 years in a row. And that is exactly what makes VYM such a good dividend ETF. They have a pretty high dividend yield, and they have continuously been increasing that yield for the last 12 years in a row. It is no surprise that VYM is very popular among us dividend investors. It has a great capital appreciation, and the dividends are amazing as well. So moving on to the number two top dividend ETF for 2023, and here we have iShares Core High Dividend ETF, ticker symbol HDV. This ETF does also have a super low expense ratio of only 0.08% and a current price per share of $100, and has a total of 81 high quality dividend paying companies, including Pfizer, Verizon, and Coca-Cola. The biggest sector is the healthcare sector, and that contributes to 25% of their entire portfolio. But let's talk about the performance of HDV. During 2023, well then they're down by 3%. However, then just like the first one, then has some of their top holdings decreased in value during this year, and that most likely explains why they're down as well. Over the last 5 years, they have increased by almost 17%, and over the last 10 years, they have increased by 46%. So again, then is the capital appreciation here very good. However, it is a bit lower than the first one, but the dividends here are absolutely amazing. HDV has a dividend yield of 4.20% and a 5-year growth rate of 6.32%. The current dividend yield is really good in HDV, and over the last 5 years, they have even increased it further. They cut back on their dividends in 2021, but other than that, then they have been very consistent with increasing their dividends. Overall, then is HDV a really good dividend ETF. The capital appreciation here is a bit lower than the first one, but the dividend yield here is higher. So all in all, then it depends on what kind of investor you are. So moving on to the third dividend ETF on my list is the Schwab International Dividend Equity ETF, ticker symbol SCHI. The goal of this fund is to track the high-yielding dividend stocks outside of the US, and that is exactly why I like it. Having exposure to other markets than the US does decrease your overall investing risk, and it gives stability to your portfolio. The expense ratio here is slightly higher at 0.14%. The current price per share is $24. SCHI has a total of 128 companies with large positions in well-known companies like DHL and Unilever. It is a very well diversified ETF, and the top sector is basically split between basic material, consumer defensive, communication and financials. But let's have a look at the performance of SCHI. Year to date, then they are up by 8.70%, which is very good. And over the last 12 months, it has given a total return of 13.39%. Since this ETF here is very new, then there isn't much historical data, and that is basically all we have. However, then has the performance thus far here in 2023 been very good. And when it comes to the dividends, then does SCHY has a dividend yield of 3.57%, which is also very good. However, there isn't really much to say here, as again, then there is no historical data, as this ETF here is very new. But based on the current dividend yield, then is this ETF here looking very good, and that is basically all we have. So moving on to the fourth dividend ETF on my list, and here we have the iShares Core Dividend Growth ETF, ticker symbol DGRO. This is an ETF that invests in both growth and value companies, both large and smaller companies that have a strong record of paying out dividends. This is a dividend ETF that I personally really like because it does not only offer great dividends, but it also includes a lot of smaller companies, and these smaller companies does have the chance of getting high capital gains. However, it also includes more risk. The expense ratio here is only 0.08%, and the current share price is $51. DGRO has 432 companies in their investing portfolio, with very well-known companies like Microsoft, Apple, Johnson, Exxon and many others. The top sector for this ETF is healthcare, closely followed by financials and technology. This ETF here is the first one where we have technology at the top, and that also speaks to this ETF having a bit more risk than the others. When looking at the performance, well, then we do see that this ETF is up by 4% year to date, and over the last 5 years it is up by almost 48%, and since 2014 it is up by 106%. So it is safe to say that for a dividend ETF, then is the growth here really good, and them having focused on smaller companies as well has definitely paid off. But let's have a look at their dividends. They have a current dividend yield of 2.38%, and they have a 5-year dividend growth rate of 10.64%, and they have been increasing their dividends for the last 8 years in a row. The dividends here are again very solid. They have been growing the dividends at a very fast pace, and they have been growing them for more than 8 years in a row. The dividend yield here is a bit lower, but that is because this ETF has a lot of smaller companies in their portfolio. However, when you look at their capital appreciation, then that might be worth it anyways. So moving on to my personal favorite dividend ETF, and the last one on my list, the Swap US Dividend Equity ETF, ticker symbol SCHD. This is an ETF that you've most likely heard about in other YouTube videos before, because it is a very popular ETF. And the reason for that is because it is simply the best dividend ETF out there. And one of the reasons why I really like SCHD is due to their investing strategy. There is quite a few things that this ETF is focusing on, and one of them is that it tracks an index that is both focused on the sustainability and the quality of dividends. And that is exactly what us investors like, both quality and sustainability. SCHD is also investing in stocks based on financial strength relative to their peers based on financial ratios. And I really like that, because when you're looking for a dividend ETF or a dividend company, then it is very easy to get carried away by these high promised dividend yields. But if the company is not financially stable, then that dividend yield is not going to be sustainable, and you're going to end up investing in a so-called yield trap. SCHD has a really low expense ratio of only 0.06%, and the current price is $73 per share. They have a total of 104 companies in their portfolio, with top holdings in companies like Broadcom, Home Depot, PepsiCo and many others. The top holdings are industrial, closely followed by healthcare and financials. but overall, then is this ETF here very well diversified across many sectors. So when looking at the performance of this ETF, then you start to understand why it is one of my personal favorite ETFs. They have increased 3.6% year to date, 45.5% over the last 5 years, and 114% over the last 10 years. So the returns here have been absolutely insane for a dividend ETF, and that is hard for us investors not to like. But moving on to the dividends, which is combined with the really high capital appreciation, what makes this ETF here so good? SCHD has a dividend yield of 3.5% and a 5-year growth rate of almost 14%. And that is very, very high, especially when the dividend yield is already above 3.5%. They have also been increasing their dividends for the last 11 years in a row. This ETF here does have everything that I like as a dividend investor. It has a very high capital appreciation. The dividend yield is very high, and they have continuously been increasing that dividend yield for the last 11 years in a row. If you don't already own this ETF yet, then I would highly recommend you to look further into it and see if it's something for you. That was basically my top 5 dividend ETFs for 2023. Let me know in the comment section below what you think about them. And if you have any suggestions or anything you would like to add to this list, then put it down in the comment section below. I really hope that you enjoyed today's video, and if you did, then don't forget to smash the like button and subscribe to my channel for more weekly content just like this one. See you guys in the next one.